Today, we're going to take a look at price action in detail as there are some significant closures with today's daily closure, and we're going to see if we can lay out some conditions for possible direction. We're going to start off with just a regular candlestick chart here. I just have an arrow pointing at the current high structure, and we are going to take a look at the charts using a few different technical tools. And in doing so, we should get a clear picture of where Bitcoin is likely to find support should it begin to fall, and where it is likely going to find more resistance as it is right at resistance right now. So let's jump into it. In today's price action, we see that we are still just going sideways at the highs here. So there's a few different things that we can take a look at. To start with, we're going to check on, well, momentum within this range, within the context of this range on the daily. We can see that a momentum indicator like Stochh is pointed down and it is headed out of the bullish control zone. So it's, bullish neutral. It's not a death sentence to see Stochh pointed down because there are conditions that could turn this back to the upside. And in particular, if Bitcoin can close above local resistance, it will most likely do that. We can also see that RSI is trending down and has been trending down for a little while here, creating some regular bearish divergence. Now, on the other side of that, we are likely to see bullish divergence develop. So in this case, it's more than likely going to be continuation drives or hidden bullish divergence. So that's not something that we're going to dive super deep into because we want to take a look at the actual structure first. So when looking at the actual structure coming off of the lows, it's pretty easy to identify the areas that are, support and resistance. In this case, we can see where we initially found resistance on the way up. That was the second time that we popped up, and kind of where we found support. So this area here was pretty key. We broke the highs after setting in this nice higher low. We broke the highs over here and we rejected just a little bit higher there, and we retraced, created some bullish divergence and pumped right back up, found resistance again at the local high, and then found support on the previous highs. And now we're in a new consolidation. So this is pretty important because this area on more macro timeframes around this $25,000, in this case, we're looking at 25, 200, 250 or so. This area is a significant area because over here, this was the actual retrace off of the bearish structure. So we had a nice bounce, after this distribution. And sorry, I'm having a little tough time with words today. A little tired, my apologies. But we had a little bit of a redistribution, my apologies. We dropped down and we got a very nice bounce off of around $17,000 all the way up to that 25,200 area. And then we distributed back down to the bottom side of the range, popped up, and then dumped off down to what is now a current major low. It's not yet a macro low. And I laid this out in my macro video, but the entire structure here needs to be retested on longer term timeframes, monthly, quarterly, in order to really solidify this as a macro low. Obviously, if it's retested and holds up, it would become a macro low. Now, we can go ahead and get rid of this. And now that we've seen some pretty important areas around the low $24,000, about 24,200 to 25,200 is where that is. Now, when looking at this, we can just go ahead and throw on a horizontal, and we've got a more general area of support for the structures below current price action. And we do have resistance right overhead here. Now, we have been seeing Bitcoin struggle at this resistance here, and this is it's a pretty key area. When you look left on the chart, we can see that there is a lot of overhead resistance even past some of the lows that are being tested now overhead. So, there's lows in and around the mid to upper $29,000 area, all the way up to this 32,000 to 32,500 or so, because we do have little wicks in and around that area. So this is a big, big test for Bitcoin. We can also see that when we come out to the monthly, this is coming in line, right, with all those monthly wicks. And we do have some close open structure in here. So we have the December of 2020 closed structure and the January 21 open structure in here. So we're on some monthly levels. We're also looking at quarterly levels, right? So these the quarterlies closed at the end of the year in 2020 into 2021. So it's a big quarterly area as well. And you can see that it was retested on the quarterly timeframes. So we have wicks all the way through this area. Now, something to note of significance is that that 25,200 area is really, really important because this is the breakout for the quarterly candle that just closed. So we have a new quarterly open. We're in the second quarter, and this previous quarter close created a major low structure. Now, something to really be aware of when looking at this is we've seen this over and over with Bitcoin. So when we look back in time just a little bit, now this isn't the index, this is Coinbase, but we can see that after creating a quarterly low in 18 into 19, right? So it was the second quarter of 2019 that we locked in a quarterly low structure, that 2018 low structure as a major low. And then immediately within that next quarter, we went down and in this case, confirmed it, right? Tested down into the low structure here and then bounced off of it, found support there, and then eventually broke out, thus solidifying that 18 into 19 quarterly structure as a macro low. Right now, we're not there yet. We're in major low territory. We are not yet in macro low territory as we have not seen a retest. But I wanted to point out this structure over here because it was not very long after setting that major low that it was retested. Now, granted, we are looking at a quarterly, so there's a lot of trades to be had. There's a lot of planning that can be done for investors. So, this is, there's still a lot of opportunity available. And in this case, these areas are very, very, very important to take note of because if we do see a breakdown below this 25,200, it's likely that Bitcoin, at least in the timeframes below a quarterly, maybe even just below a monthly on the daily, weekly timeframes, retests the lows, in the immediate short term, right? So we do need to understand that. Now, my bias personally is that we test up higher before that happens, but that's never a guarantee. So what we need to do is go down and the lower term timeframes here, like the daily, and take a look at some confluences. And in this case, I would like to point out just the local range, and then we'll work our way. Rather, I'll work my way to some of the more it would be macro time frame ranges, but we'll do it from the daily here. And we're going to start out with the local range just using the Fibonacci retracement tool. We're going to go from the wick high to the wick low, and we're going to just quickly get these horizontal lines out of the way just for a moment. And I want you to see where Bitcoin is in this local range. It's currently trading below the 618 here, which is at 28,171. So basically 28.2, it's above the 618. Bias is that we're going to go test around that 28,600 area at the 786 here. Now, below the 618, we have a bias to go test the 50% fib. So the 50% of the range, just half the range. And we have seen that Bitcoin's trying to stay above that area. But above this, below this 382 on a daily close, that would give us the bias that we're going to go test the lows again around 26.5. Now, that means, of course, staying above the 50% here on closes gives us the bias that we will be testing the upper half of the range, possibly even up to the wick highs at just under 29,200 there. Very important to understand that if we take this fib and have extensions on it like I do, that we could see Bitcoin eventually trade up. If it can break above the range highs here, we could see it trade up to around the 1272, which is just under $30,000 at 29.9 or so, to the 1414. Those are pretty major areas there at that 30,000 to 30,300 or so. If it can get above there, we see that just shy of $31,000, we have the 1618 Fibonacci coming in. And above there, we have the 1786, 1888, and two spot extensions up there, kind of just above that $31,000 coming in at, just below $31,000 at the 1618 to just below $32,000. And you're going to see in just a moment how this kind of lines up. Because when we look at the support and resistance that we just had there, we can see that the overhead resistance is coming in just above that two spot extension at around 32,400 or so. So that is the distribution range here. It's kind of falling between our Fibonacci areas at at right here, just above the 50% fib where price is currently trading, and the highs up here just above that two spot extension of our current range pull. So that's coming in at the close opens up here. The 1618, there is also a lot of wicks being thrown around. So that area just below $31,000 is going to be a big area to see Bitcoin reclaim to the upside. And to the downside from the current range that we're in, all we need to do is take this Fibonacci retracement and we will look at extensions to the downside outside of the current range. So we'll pull it from the wick low to the wick high, and we can get a ballpark estimate of where things would come in if the one spot extension is closed below. In this case, we see the 1272 coming in just below $26,000 at 25,800. We see the 1414 coming in at the 1414. Yeah, I said it right. Coming in at 25,421. So basically 25.5, just above the support there at 25,200 or so. And the 1618, I want you to note this blue 1618 is cutting right across the close open structure on the highs, not just from the most recent structure built, but also historical structure. So if we look back here, that 1618 and even that 1786 kind of come in right in and around the close open highs of the breakout range. So that area has a lot of confluence with something that I show you guys a lot here, and that is Bollinger Bands. So if we kind of take this off here and we look at Bollinger Bands, this is the tool that I built that has a bunch of integrated stuff in it. You can find it in the link in the description below. It is free, and it's 100% free. It is a private indicator, so you will need to add it from the link in the description below if you'd like to use it. It's in beta right now. I will release it publicly so that you can search it using the indicators menu, but it's, I'm working things out. I'm adding things, I'm modifying things. So go ahead and throw it on your chart, see if it's something that you like. It will be updated over time, so go ahead and visit that page. I would say maybe once a week. I try to put in some work on the indicator and update it. But in this case, I wanted to show you kind of how things are lining up with the Bollinger Bands, because if we, note where the third standard deviation is to the upside and the third standard deviation is to the downside here, that being the purple zone, the line at the top here is coming right in line with the highs, and the line at the bottom here for the lower third standard deviation is coming in right at the lows. And we see that volatility is really low. Bollinger Bands are a particularly good tool for visualizing price volatility. And that does mean that when volatility is very high, price can move freely within those Bollinger Bands, within the set of Bollinger Bands, the upper first, second, third, and basis band lower first, second, and third. And when there's high volatility, that means that we get good movement in price. And in this case, we have just seen Bitcoin consolidating for a couple weeks now. So volatility has cooled down quite a bit. You can see that using this metric down here. This is called BBWP, and it's built into the indicator here. This is just a volatility metric, and then there is a moving average there. So if BBWP is below the moving average, so its number is lower than the moving average, that means that we are in a volatility cool down phase. Doesn't indicate direction by any means, and it does print as red in the box there. If BBWP is above the moving average, indicating that volatility is increasing, this box will turn green. So we're in a low volatility period, and volatility is still decreasing at this particular moment. And in environments like this, the upper third and lower third standard deviations typically cap price actions movement on the first moves. So when I say don't get faked out in some of my videos, if Bitcoin goes and spikes the third standard deviation, it's more than likely, well, it's right around the highs, it's more than likely going to pull back on the daily time frame. Especially if it closes outside of it, it usually pulls back within reason. You usually see wicks coming in at the upper third and lower third standard deviations. But the more that this contracts, the more likely we are to see a situation like what we saw coming off the actual lows back here. And this is going to give me a moment because I'm pretty zoomed in. We saw a very tight Bollinger Band contraction back here off of the macro, or not the macro low, sorry, the major low. We saw, basically a range form with the Bollinger Bands where price moved between the top side and the bottom side. You can see how, wicks outside of that upper third standard deviation typically comes back. And because things were ranging and kind of cooling down after just a massive move down, we kind of just floated between the upper end and lower end third standard deviations there. But then you saw this very tight contraction of the Bollinger Bands, very, very low volatility coming off of a time period where we were just kind of consolidating on the lows. Many people calling for very, very low prices that just didn't seem realistic at the time because we had not yet determined direction outside of this range. And this is very easily visualized with Bollinger Bands. We can see that after the move initially got above the basis band here, it went and tested up and even tested outside of that upper third standard deviation. And in the lower term time frames got rejected, right? In this daily candle, it did get rejected. But what you want to see is closures above the second standard deviation, or on the other side of that, below the second standard deviation when contraction's really tight like this. And then you want to see a move immediately back up to that expansive point, because once we start closing above or below the lower first standard deviation. My apologies. If we close above this first standard deviation, we start expanding up. Our volatility begins to increase to the upside. If we close below the lower first standard deviation, we see the etchings of volatility increasing to the downside. Now, volatility very aggressively begins to increase in the direction of price action when you see closures above that second standard deviation. In this case, it was to the upside. If it was going to head down, it would have been to the downside. So because volatility was very contracted here, we went up and got rejected at the, there's technical support and resistance in these areas, right? So it got rejected. It's also at the upper third standard deviation, but Bitcoin immediately went back up and closed not only above the second standard deviation as it did in that same rejective candle, but it also closed, right on the upper third standard deviation and then found support on the first standard deviation. So that's the beginning or the etchings of the move coming off of extreme contraction or low volatility in this case. If it was going to happen to the other side, it would have happened in much the same manner, just kind of invert the chart. As long as it had closed below the second standard deviation, it's probably going to keep poking at that third standard deviation because it's so contracted and it's around technical supports, right? And then if it was to find resistance at either the basis band, wherever that would have been, or the lower first standard deviation, that would have been giving us the bias that price was going to drop further. So in this case, we looked at where there's technical supports, right? And they are technical supports and resistance here. And right now we're running into some pretty heavy overhead resistance on the close open structure here. So Bitcoin, as you'll see here, when I throw down this, this horizontal, you're going to see that when we scroll over, where is Bitcoin closing below? Well, it's closing below this 28,600. So this is a really important level. If Bitcoin can get a daily close above here, that doesn't guarantee that it's going to go up and just, start testing those deeper levels, but it would give us the bias that if it can get closes above here, it can also get above that second standard deviation and begin expanding the Bollinger Bands to the top side. So basically increasing volatility on an upside move. I do think on any initial moves in that direction, it will get rejected around the third standard deviation. And the same thing to the other side here because it's coming right in at the lows. So there is, in my opinion, a higher probability if we test down towards the lows that we will have to go and search out that actual longer term support area because it's coming in on a monthly, quarterly, weekly basis down here. And that's that 25,200 area. And we can get a good bias on that area by not just taking the wick highs from over here, but we can take a look at the close open structure on the highs because that's going to be really important. And we can then create a zone. And this zone now is, between this high area over here where it was getting rejected initially and the close open structure just before, we saw breakouts later on. So big zone. We've got basically 3 taps on it here. We'll go ahead and turn off the bands here, clean up the chart just a little bit. But you can see here that, this area of resistance was tested 3 times before getting the breakout here on this candle back here, right, to the range where we are now and testing this resistance. So in this case, I would not be surprised if we saw Bollinger Band expansion and volatility pick up on a downside move that then targets this big area here at 25,200 to 24,800 or so. You've seen me talk about this quite a bit in the shorts videos where it's, where I do Bitcoin in 60 seconds. That's why I'm calling out that area because this area, when you flip to a weekly, is massive down here. It's a weekly structure as well as the daily structure, as well as the monthly structure, as well as now the quarterly structure because it was the quarterly breakout. So big level. If it is lost, I do think Bitcoin dives further. I'm not of the opinion that it's a death sentence by any stretch of the imagination. I do think that we would test down further. And, hopefully for investors and traders alike that want to look for further upside, find support, creates a macro low. I'm not necessarily married to the idea of it going to the downside right now, but what we're doing here is identifying major areas. So in this case, if we can get above 28,600, then I do think that we retest the highs, but because we are right up against some pretty heavy resistance, I would want to see closures above the current highs. That would expand the Bollinger Bands. That would pick up volatility to the upside. And as long as it can hold support at that 28,600, then I'd be confident in searching out higher targets up here, anywhere between, that $30,000 to $32,000, which is just, simply it's right at these highs over here. So that's just going to be this area here at, $31,800 to $32,000, but there's also highs below there at 31,350. We've got some highs here at just around the same area at 31,200, $31,000. And then we've got a big low structure here right at 29,672. So 29, a deeper $29,000 to $30,000 area. You just take it in order. That area gets hit, take that out, $31,000, and then possibly 32. So this is going to kind of tie in with momentum now, because when we look at the structure for the 2-day, I'll just kind of move this arrow a little bit. The 2-day structure is, just consolidating, but it has lost the upper first standard deviation. And if it is going to take a trip to the downside, we have the 2-day closing. We just had a 2-day open while I'm talking here. So, we could see the lows get tested, right? And if they hold up, great. Probably looking to go back and retest the upper first standard deviation. What area is that? Well, it just so happens to be 28,600. And if we were to break out above there, we can start targeting the upper second standard deviation as the next area of interest to the upside from a Bollinger Band perspective, and a technical support and resistance perspective coming in at about 31.5. And if things were to break out above there, we don't often see when Bollinger Bands are this wide that we get closures outside of the third. So I'd be looking between the third and the second standard deviation down here at, guess what? That 32,000 to 32,300, 400 area as the next area of interest to the upside. If Bitcoin does lose the low, then I'd be looking to the basis band, which is just above the support area here. So the basis band is coming in at 25, looks like 808. And then we've got support directly below. And on the 2-day, this was also a big area where it has not been retested, but we had 2 big taps on it. And then we had a 2-day rejection and then a candle that plowed right through that resistance. So that is the way that I'm looking at this. And right now the conditions are going to basically be, for me, break the highs, we're going to test higher from the daily perspective. Break the lows, we're probably going to test lower from the daily perspective. We also have a 3-day that just opened now. And this does lend a little bit of confluence to the possibility that we could stay in this local range and continue to test higher, because the upper first standard deviation here is coming in about 27,500 to 600 area. And if you can hold the upper first standard deviation in a trend, it typically is indicative of a nice strong trend in that direction. So that doesn't rule out losing it, though, because if that area is lost and the low on the 3 days lost, look at where the basis band is coming in. It's coming right in there at that $25,000, right in between our supports at 25,800 on the close and 24,214, 250 if you want to take some of these other wicks over here on the wick highs. So big area. And I do think, my personal opinion is, from what I have seen over the years, that's going to be the main key area. And, I do think that on first pass, at least, it's probably going to hold up. That doesn't mean it holds up over the long haul, but at first pass, I do think it's going to be a good area of interest for, myself as a trader, and possibly, if it can hold up and form a low there, if it got there, for investors as well. Now, the 5-day did just open. 5 days giving me the bias that we're still looking up and to the right. Over time, after consolidation, the upper first standard deviation coming in just above the low side wicks here on the 5-day at around that 26,850 or so, with those wicks coming in at around 26,500. So, we can see the same thing on the 5-day. Big support area here at that 24,800 to 25,200 or so. And the weekly, this is the other thing. We see the volatility is increasing to the upside here. So if Bitcoin can maintain that first standard deviation at that 26,850, $27,000 on the 5-day, this will continue to increase. And it is up over the moving average. So we see that volatility is increasing because of this nice move up. Well, it's technically from this nice move up. We found support on the basis band, move up again. So very key. And the weekly, we see that the upper first standard deviation, which we want to see Bitcoin stay above to maintain a nice strong trend. Coming off the lows here, we have increased volatility to the upside here, but in the context of the weekly, all of the volatility was increasing on the way down. So it's kind of a mean reversion setup as it stands right now. So this would suggest that we come back and retest eventually over time, and maybe even sooner than later, we don't know, the basis band. And that's where we had an increase in volatility to the downside. And now we are trying to reverse that structure. So volatility begins to decrease because this is a mean reversion play, because we were increasing to the downside. And now we're popping back up. So we're reverting back to the mean. So volatility is technically cooling down. What we want to see is for this to create a nice bullish structure, which we do have right now, come back down and retest somewhere either, on supports and then let the basis band catch up, or come down to the basis band, which is pretty deep down there at 21.8 right now, 21.7 to 8, and see volatility really cool down. And then the next time we get a nice expansive volatile move, that then becomes, move to the upside, thus creating this transitional structure. Then, you get all the Wyckoff guys talking and the Elliott Wave guys talking. And this was the structure that we were looking at the whole time. But of course, you're not going to know that until after it's done. You want to be able to make good decisions for trading and for investing based off of what you're seeing as these things develop, not when they're already done, because then, you're either, buying in certain areas and then selling down lower, losing money, right? Or you are missing out on a lot of the potential move and buying higher, usually at resistance, it heads down, and then you have to make your plan then for how you're buying or trading. So in this case, I do think we've got a pretty good idea of where we need to see price break and where we need to see it hold. So locally, if it can hold the lows, great. Retest, try that 28,600 area. If it can get above there, then we're looking to eventually work our way up to most likely around $32,000. And if it does break down, we're looking to, retest the breakout area at around that 24.8 to 25,200 or so. If it just throws wicks down there and gets closures back above, great. I do want you to be aware that the first move off, first volatile move that we see, either to the upper third or the lower third standard deviations, while they might be indicative eventually of trend direction on the daily, that they usually initially get rejected in those lower term timeframes. So that is going to do it for me today. I did want to get a longer form video out as we are headed into the last day of the trading week. So got our Friday candle, and weekend price action can get pretty volatile in those lower term timeframes. So keep this in context for the daily. I want to thank you for joining me today. You have a wonderful morning, afternoon, and evening, no matter where you're in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out.